So now let's dig a little bit deeper into the reopening. What does that reopening look like? And how is that going to impact some of the things that, when we look at inflation, that have been quoted as the reason why CPI isn't as high as it was previously? So let's look at this chart because I think it's a funny one in terms of the change in consumer prices from February to March. Car and rental trucks, admission to sporting events, hotels. So some of these components that, who was renting a car, who was renting a truck, who was going to a sporting event. You couldn't even go to a sporting event. Now, who was going to hotels? Those are starting to see some recovery, which again is driving up some of those price increases and those price adjustments in general. And that's going to bring up that bottom end of inflation on a CPI level because we're seeing those PPIs roll through. We're seeing those business level inflation that is going to get passed on to the next layer. Then when we look at, okay, well, let's talk about the savings, because if we have prices going up, well, you have money to spend. So when we look at the average of 2000 and 2019 and 2020, clearly there's more in savings. I am not saying there isn't more in savings. I am saying that it is skewed to the upside and not everybody's experienced this. And those that did save more were already going to spend on more concert tickets, go to more sporting events. Maybe you'll take an extra vacation, which is great for that location, but you're not going to get an equal spread, again, speaking to the income gaps in general. Now, let's just talk about this in a bit more detail. So when we look at the shifts in general, when we look at overall movements from spending, the spending has really come from P&G. So P&G has talked about increasing their total costs from about, they say, mid to upper single digits across all walks of life, when all types of products, and that's going to hit all walks of life. That's not going to hit one, people who are rich still buy diapers for their kids. People who are poor still have to buy diapers for their kids. It's just, who is it going to impact the most? When you see $54 and you cringe a little when you're buying Pampers, and now you're seeing $60, somebody is going to grumble. Someone's going to say, okay, I have to go down in quality, or I have to figure out what I'm not going to buy that. And that becomes, I think, the overarching principle of what comes next. So that's why when we look to, okay, well, who is showing the most mobility? Well, it's the ones that live in the lowest earning counties, because those people have to drive to work. Typically, they're working on an assembly line. Typically, they're working in a factory, and they have to be on site, where those who are in marketing, accounting, things that may pay more, you can be home. You can have things delivered to your house. You don't have to go out. This is where we're starting to see that income gap again continue to continuously open up, maybe more exposure to those who are poorer versus those who can stay home and essentially hide away. Again, this is creating this divergence of what does that activity look like? How quick do we see this activity normalize? Because these individuals are the ones driving more during the week. They're not going to drive as far on the weekends, or the opposite. These individuals are not going to drive as much during the week, but they will drive more on the weekends. This is where we continue to see this bifurcation in the market that's not going away. Now, when we talk about initial claims, the view is that we're going to get some increases in claims as some people are placed under different buckets. So we're going to have some noise. That's why we always look at the lagging numbers, which have gotten better. We're down to 17 million. And this is something that we'll update when the numbers come out tomorrow. Tomorrow, Thursday. And we'll talk about it again on Friday. But when we talk about U.S. capacity utilization, so when we look at capacity utilization, this is where we talk about what is the utilization within the economy. So the expectation was to be at 75.6. We came in at 74.4. So we're still seeing growth, like it's still positive. We're coming off the lows, but we're still not getting to the level of where people want to be, or where people think we should be in general. And that's why I think on where where is this going to go? Well, how is this going to react? And I think this is speaking a bit more to the industrial side and the industrial production, which again has gotten better, but are we reaching the levels that we need? And is it because the consumer is weakening a bit, or because prices are going up? So we're seeing a little bit of a digestion period. So now when we look to the industrial activity in general, so it falls back down here when we look at IP, manufacturing capacity. So again, we're still rising, but we're not back to pre-COVID. And just based on the distance in between, it's going to be difficult to get there over the, at least through Q2. Obviously the reopening will help, but what haven't people bought? Like where is that reopening going to be? It's going to be more on the services side, not so much the manufacturing side. And that's where I think some of this shows the latency or the lag that's going to remain within the system, especially as our export prices go up and the international market faces COVID problems, vaccination problems that is going to mitigate some of that recovery. So then when we look at, again, looking at it a different way, you can see just what happened in 2008, 2009. You had this big dip, and then you had this steady move back. So here you had that big spike down, that check mark. It still takes time. There's the gradual move. And I think things here that will still move up to the, up, but the rate of change is not going to be as aggressive, even though we've thrown trillions of dollars at it, which I think leads to some of the bigger issues in general, which are the pricing. So Empire Manufacturing, number of employees expected in 6 months. This is what we keep talking about. We see that hiring coming through. We will get those some of these individuals. I don't think it'll be as aggressive, because this is expectations. They tend to go up and down, but the trend is in the right direction. We will get more people hired. End, period, stop. That's going to happen. But when we look at the Philly Fed Manufacturing number of employees, same thing. This is not just Empire, Philly. The rate of change may be adjusted, some of these things, but this is going to happen, which will be a net positive for where we are on the unemployment side. But then when we look at delivery times continue to shift higher, and unfilled orders. Unfilled orders are going to hurt what our future orders going to look like, because if you have that backlog, you're going to be slow to take some of those new orders because prices might go up. You might have to give something on a residual where look, this is the price for right now, but this is going to expire. And the unfilled orders is becoming a bigger issue in general when we look at some of those overhangs. And then when we look at the delivery times, again, they're going to go hand in hand, which is leading to some of the bigger issues when we talk about the longevity of inflation and where is that going to go. Now, Empire, prices received is clearly at an all-time high going back to 2005. Prices paid coming into the highs that we had back in 08 and again in 11, but you can see that the prices paid is continuing to go up, and I don't see this abating just because of the supply chain, the issues, but we're only now starting to see it roll down to prices received, because you can look at when we look at prices paid at 75 and prices received at 35. There's still a delta in there. There's still something that's going to close that gap. Now, you're not going to pass through all of it. That's just going to be difficult. You'll lose sales to competitors. But the manufacturing expected prices received is only going up as well to all-time highs, which just means that you're going to push through as much as you can. So your price received is inherently going to go up, because you have to push through prices. You've already started that process. You've already rebid. You've already resubmitted for estimates. And again, that's going to drive in one specific direction. So then when we look at loan market time, we want to look at loans. What is happening on the loan side of the equation? And here you can see the pressure that came into those loans. So you also had companies that weren't going to do anything as they looked to survive, when you had these ratios getting shifted and the loan market timeline as the loans were slow to come through. But as things have gotten better, As things go back up and you see tightness in some of these spreads, that's where you've seen some of the additional loans come in, which is why last week we talked about the amount of new paper that has come into the market, especially on the loan side, because it just makes a lot of sense based on where the spreads are and how things are pricing. Now, this is why when you look at the U.S. loan fund flows, you can see that people are trying to take advantage of it. There's a lot of new fund flows that people want to invest in. They feel confident with the manufacturing, with where the consumer, where the economy is going. And this is a way to get some yield that's much safer based on duration versus putting it and storing it in some money market account. But there's also buying houses. When you look at the index in general, so housing starts are going back up. You know, the index is obviously turning back in the positive direction because people are viewing real estate and homes as a better investment than other. So then when you look at households view housing as a good investment, when you look at in general, as of February 2021, people are looking to buy new homes as rentals, which is why when we look at where is rent going to go, where are rent prices going to go, people are looking to rent. You know, and you can see probable rent, probably rentals in general, where when you look at stocks and the markets, people are looking at a means of buying a home. So buying a primary residence versus investing in the stock market, people are now looking, saying, I'm going to buy a home with maybe what I made, or the market looks a little frothy. I believe in the real estate market, which again is also frothy, but neither here nor there. So here you can see people who are looking for rentals and looking to buy homes versus investing in the stock market as that dwindles and people look to real estate in general. So at the same time, we're having more second homes. More people in 2021 than ever before are buying a second home. If you're going to work from home permanently, if you want a comfortable place to be, maybe you're not going to travel as much because you don't like the risks in general, so you're going to buy a second home. You could also rent out that second home, which again comes back to the rental becoming a bigger driver. You also have more people as the investor, again, speaking to rents and those and looking to get people and that secondary income. We're seeing investors come back into this market. Then when we look at the MBA purchase index, you can see that we're still at all-time highs. We're near all-time highs. We're just below 2019. But again, we're seeing the same trend to the upside, still maintaining a fairly strong flow in general. So then when we look at U.S. financing index, refinancing is coming down as we have rates going back up, or at least now holding here where it's not the same type of risk reward, well, not really a risk, but not really worth the money at this point, given where rates are in general and how things have adjusted. So then when we look at home buyers are having to make higher offers, this is what we were talking about, where the sales to list price, it's coming up to over 100%. And in some places, we're getting up to 106, 112% above asking. And then the national average is continuing to drift higher. So again, these are things that are going to continue to weigh on the consumer, prices that are going to continue to push through. And this is why when we look at what's in savings, what is happening in general, it's going to be difficult to see all of that come back and get unleashed into the market. And because obviously it's getting absorbed into some of these markets. Now that we've covered, the U.S. in general, we're going to shift a bit into Europe and look at what is happening with Europe now that we're having some talks of reopening, especially coming out of Italy and Greece. And what does that mean with the German election that is right around the corner?